What's good, YouTube? It's your boy Be Easy, and man, listen, yeah, we are back with another video. And I always tell you guys, I always smile during my videos, whether the price is up or down. I keep them on the pitch one. Anyways, we are here today with the MOASS video. And I'd like to preface this video by saying I'm not a financial advisor, and this is not financial advice. But listen, guys, my videos are aging well, man. That's all I gotta say. If you go back and look at the stats, everything I've said has come to fruition. But with that said, guys, let's jump right into this video right here. So I want to start this video with the MOASS prediction date, and I'll give you that right up front. So if you don't want to watch the rest, you don't have to. December 15th or December 16th will be the day. Keep that in mind. Now I'm going to give you 2 dates for one reason. Reason being is the history of AMC. And I'm hearing a lot of people talking about Mondays and Fridays. That's cool. But if you look back on the history of the squeeze dates, it went Thursday, Wednesday, Wednesday, and Thursday. So I'm going to keep that congruent with the next thing I'm saying. December 15th is a Wednesday, December 16th being the Thursday. Now, why December 15th? Why December 16th, you ask? Well, there's a lot that goes into this. And this has nothing to do with anyone else's DD. This is my own DD. And I'm telling you guys, I have a feeling on this. So, let's talk about knowing thy enemy. Okay? Now, the enemy is going to disclose to us what we need to know. You know why? Because we know the enemy's main weak point, which is greed. The greed is what kills them, guys. Because they could have covered that $5. And we all know that. And they did it. They chose to set a price of a penny on the stock. Well, guess what? You're a little bit far away from that at this point. So, all right, knowing thy enemy is important. Why is that? They are going to wait to the absolute last minute, millisecond, to make the squeeze happen. Now, what we do know, the markets are closed on holidays, meaning Christmas, New Year's Eve, and all that stuff is shut down. Running it into 2022 bears a lot of risk. Why? Capital gains taxes, my friends. And as you know, short-term capital gains taxes are 37% at the going rate. And long-term capital gains taxes are 27%. So the additional 17%, call it basically doubling up for the Fed and the government here, in order to rectify what's right and do what's right here on this play, which is to cease and desist naked short selling, short ladder attacks, and that's not a word, but guess what? It's called collusion behind the scenes for those shills in the comments. And by the way, where were the shills at today? I'm looking all over the troll. I couldn't find one shill in the comment section. You know why? They're getting their butts kicked. They're too busy closing out their short positions. So that's knowing thy enemy. Very important on this. Next talking point will be the sentiment of retail. The sentiment towards retail right now is green bag eyes. Okay, those the smiley face with the money signs on the eyeballs. Why? They see retail and they see dollar signs. Why? I keep telling you on these videos, the retail investor, especially the nuance or newer retail investor, I should say, is a younger investor between the ages of 18 and 30, with less patience, less less prudence or more prudence, less prudence in the investing side, because as we know, institutions in their investing style makes less mistakes, are very more calculated, and they have a lot of super brain accountants working on these plays, creating trading bots and things of that nature. So they're more accurate with their trades, less inclined to lose money. So that's the sentiment towards retail, guys. They see us as a new plate of steak. What is that steak, babe? What Wagyu? The Wagyu, right? They're a beautiful piece of Wagyu being prepared by a fine chef. Okay? That's what they see us. And they all want to get their hands. And if you notice what they're saying, they want basically a fair market so everybody can get their hands on this, not just the payment for order flow type of, as you see in Robinhood. You see what they're doing. They're begging for new clients, new people to sign up to the accounts. Probably shouldn't have took away that buy button. But hey, that's just me talking. So anyways, that's the sentiment towards retail, guys. And all of this leads up to the culmination, the MOASS date. Now here, let me continue. Obviously, the taxes I spoke about, 37% to 20% capital gains. And that leads to the point that the American government needs to strengthen the American dollar. If you're looking at the Bitcoin right now, Cardano exploding, Bitcoin and Ethereum exploding, also saying that within 5 years, these currencies will replace the dollar. And in 5 years, what does that mean for banks? You do the math on that. And that's why you see the Bitcoin chart shows you less investing with margin and with leverage, guys. That means big institutional investors are the people investing into Bitcoin. They want to get in now because they know now's the time. Because when it does in 5 years hit whatever number it's going to be at, that means they've already been here and they can more so try to control here and there things of the market. So with that said, let's move to our next talking point. Share dilution, guys, it's coming January. Adam Aaron, he already put a poll out there for the shareholders, which I voted no, in which he wanted to release a certain amount of shares into the market to accrue more capital, in which we did see some investors or stockholders of AMC, which are involved with the company, release some shares back about a week or two ago on that, which is totally normal for any CFO, CEO to do on any other stock. And this was a relatively low amount. As far as the share holds, he holds about 1.5 million, and there was only about 42,000 shares that were actually, resold back into the market. I don't call that share dilution when you're looking at what these short sellers are doing with the naked shorts and the possible float being at 1.9 billion or something like that, something crazy numbers, guys. And I'm doing this all off the top, so just bear with me here. Now, shorts do have to cover one day, and I'll be right here. As I said, I told you guys, I filled out my beneficiary. I'm not focused on how long the play takes, but I do have the date prediction because all of the math makes sense, and that's why I call this video When MOASS Quick Math. It's quick maths, guys. It's just connecting the dots, and that's what we do on this channel. I keep telling you guys, we connect the dots. I am going to be releasing my videos on how to pick the best stocks, also how to read charts. As you know, my background, or as you may not know if you've not watched any of my former videos, I have a background in CNC machine operating, guys, in which we had a government contract in order to make 5,000 M16 parts per week in order to ship over there to Afghanistan and things of that nature and all over the world. So I'm making my new fluctuations on the actual chart at my job, which we have the x-axis, the y-axis, and there's the z-axis, guys. So in my mind, z-axis works as time on the stock market chart because there is no z-axis. So I thought reading charts would be a blast or a ease, to put it shortly, but as we know, the charts that machine operating, they have a more regulated system there, so you're able to predict movements, fluctuations on tool changes and part changes and things of that nature. So that's what I'm saying about the prediction method, combined with the fact that mathematics are mathematics. 1 + 2 is 3, guys. That's it. So with that said, let's move to our last talking point here. Let's look at the dates of the prior occurrences, guys. We're going to look at, when I show you on this next chart, we're going to look at the chart. I have the date of January 27, showing the volume being at 1.253 billion, which is shares traded on that particular day. Okay, crazy amount. And then we look at the fact that in the first 2 months of COVID, guys, the stock took a major hit. Okay, got beat down to its lowest point it's been in a while. So with that said, the next dates we'll look at will be May 12th and May 13th. Now from January 27th, we had those lows, those consolidation periods, those small volatile movements. And we saw a volume of 54.423 million shares traded on May 12th. And then on May 13th, we had 296.525 million traded, which was the highest that month of May. Okay, and since January. Also showing May 26th, another date that we're looking at here. May 26th volume was at 379.064 million shares traded. And then May 27th, 705.456 million in volume, guys. And volume is our key indicator on any play. Volume. For example, even if there's low volume, guys, and we see major stock movements, what does that tell you? That tells me one thing. Low volume makes big movements. What does high volume do? Makes even bigger movements. So whether that's bearish or bullish, use that in your chart predictions, guys. It's very simple. And quickly, just to give you a quick heads up, not to get too off track, but DCA is the name of the game. Okay? That's how you play the market, guys. DCA, the lower your DCA, the higher your chance for profit. It's that simple. So we'll get to those videos. I'm telling you they're coming. Again, mathematics from a CNC machine operator. Okay? All right. That's all I got to say. So, our last points we'll get here. We'll get to the prices, and then I'm going to show you guys the chart just to show you exactly visually what I see up here. Okay? So, February 20th, we topped out, and this was 2020, I'm sorry, February 20th, 2020. We topped out at $7.73. January 27th, as I alluded to with the volume, the highest volume, we topped out at $20.35. And then on June 2nd, guys, June 2nd was the volume at 766.462 million. And we seen a price of topped out in the closing day, June 2nd, 72.62, which I had a prediction that day for $76, or not that day, but my out price was 76 if I had a prediction for where the stock was at the moment. I was pretty close to hit 77 in I think the after hours. So with that said, guys, and there's proof of this. You can go back. I'll show you the proof of my predictions. Also, June 2nd, okay, was the last date. Now, let's get into the charts. All right, guys, as you can see, we have our chart here, and I will show you guys what I mean, how I have it drawn out here. As you guys can see in the background, I have my Williams fractals. These red and green up and down arrow triangles. Really the only two trading methods you need would be your 5-day and 20-day moving averages on a 5-minute chart. And that's just on a minute scale whenever you're buying and selling, guys, and you want to zoom into the 1-minute charts. But that's another thing for another day. So, point here I want to prove here is that on January 27th, the volume was 1.253 billion, as we've seen our high. Let's move this here. Let's move this. Let's delete. All right, January 27th. Then, as you can see what happened on the daily charts, guys. Okay. We have a sell-off here going into a consolidation period and slow ascending line of support there. Moving into our June 2nd date, which would be about 5 to 5.5 months. Maybe not even 5 and some change, 5 months and some change, in which we had our next parabolic move upwards, volume, as you can see, followed by our high price, $72. And again, in the trading view, does not show the pre and after market movements, I don't believe. Maybe there's a way to do it, but I haven't found it. So here we go. You see the movement there, right? Now that's 5 months and change. And as you can see, we had our big move today. All right? big move today. What does this mean? It means nothing to me, because the numbers are psychological. As I said, this is a fear and greed index. What you're reading is people's emotions, guys. You're reading people's emotions. Those red and green candles are people's sentiment towards a certain security or stock. Okay? So what I'm reading is a lot of fear right here in these reds. A lot of fear combined with finally they announced that Amazon was thinking about buying AMC, which I think is just a tool that they would use to describe why the parabolic movements, rather than to, give it away. So anyways, that's our charting, guys. And again, I have our date, December 16th here, if you can see. And if this makes sense in how measuring, basically measuring the movements makes sense to me in my eyes, guys. And again, we'll go over this charting. I got a lot going on here, just in case you're wondering. My tools I use here: VWAP, AMA and AA, EMA, fractals, and volume, guys. That's pretty much all you need. And again, there's other tools that we can use. We have the MACD underneath and other things of that nature, which we'll get into. But for now, guys, this is the chart. This is what you need to know. All you need to know is December 15th or 16th will be our date. So that was the chart, guys. And again, I want to focus on the max pain theory. And this gives me my initial prediction. Again, this is no one else's DD, which is I love about it. And the same thing I did with the Bitcoin. That was no one else's DD. That was me thinking about the possibilities, guys. Connecting the dots. So again, we're battling a skynet, robot, terminator, AI, controlled by the hedge funds. What does that mean? Greed. What does that mean? Max pain. What does that mean? Everyone is the ops or the enemies. In this case, the individual or retail short seller and the retail long investor, guys, or the one who does the call options, are the enemies as well. This AI bot wants to snatch up those puts and snatch up those calls. Snatch the puts, snatch the calls. Snatch the puts, snatch the calls, guys. Do this all the way throughout December, because in those minute movements, intraday movements, 5 minutes here, 10-minute, 15-minute chart, whatever you're looking at, daily charts, those intraday movements they're making lots of money behind the scenes on these small movements, guys. And that's the point of this, is that they want to accrue or accumulate as much as possible from January to December. Now, if you think about it, in January, we had 1.253 billion shares traded, a lot of them going long. What does that mean? If the government taxes that, and again, the second date I want to give you guys is April on that Wednesday or Thursday before May, because again, short-term capital gains taxes versus long-term capital gains tax. It's basically double, 20% or 37%. You do the math, which one you want to have. So, it's a very simple video, guys. I don't want to draw your time like I've been doing. I've been rambling a bit. But that's it. I'm going to leave it there. Max pain theory. Okay, volatility. Snatching up everyone's the ops. Calls and puts. Okay, unless you're an institution, then they're looking out for your best interest. As far as the AI bot is concerned, because it was developed by the super hedge funds, okay, in which they're colluding behind the scenes, creating a super hedge fund. So you got apes versus a super hedge funds versus the SEC and the Fed and the CFTC, and versus the world, guys. Okay, that's what this is about. And like I said, this is a stock market being played out on, multiple fronts, wars, many wars being played out on a single front, which is the stock market. But those multiple wars, guys, I'm telling you, it's real. Okay? Remember that CIA agent that was speaking out about this? Keep those things in mind, guys. As we know, SEC, Mr. Gary Gensler, is attempting to do a better job than the last guy, and I'll leave it at that. So with that said, watch those rule filings. when they go into effect on the Fed website, not when they're proposed. And let's wait. And again, I'm voting for T plus zero. T plus zero, guys. No more T plus 35. No more T plus 2. No more Fidelity delivers. No more naked shorting. No more being able to short a company 500% of its worth. No more of that stuff. All right? So these changes in the market, they're good and bad. Well, they're great. They're not really bad for us because it is what it is. So anyways, I'm going to leave it at that, guys. MOASS prediction date, December 15th or December 16th. And if not those dates, that's even better, guys. Guess what? We win still because we pay long-term capital gains taxes rather than short-term capital gains, which saves us about half of our money in taxes. Okay? So that's great. And not to mention, if it doesn't squeeze December 15th, 16th, then you go with the April date because May was the next closest highest volume date, meaning the most max pain that they can affect in basically squeeze from. Okay, guys? They want those tax dollars back in the American dollar. Let's get our American dollar back where it needs to be, guys. And let's do this, man. Let's keep investing. Stay tuned for more.